Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckholt dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word, episode 79. We're recording it on June 12th, 2024. We got Matt Beamer. Our guest will be Robin Cross. I'll have Matt introduce Robin in a second. Greg is probably on an antique Riva Aquamara cruising across Lake Como right now. You know what that boat is? That's that old 1960s Ferrari looking boat with the dual motors and the mahogany. I'm just picturing him doing that right now. So hopefully
Indiana Jones.
Yeah, exactly. So I'm going to jump right into it. And Matt and Robin Cross. I'm going to have Matt introduce Robin, talk a little bit about how they met each other, what they do together, and then we'll pepper you with a few questions about what you actually do, Robin.
Sure. My pleasure.
Well, we're going to start off. The very first thing we're going to do is we're going to clarify his name is Rob.
There you go.
So even though it's like me, my name is Matthew, but everybody calls me Matt or Beamer. In Rob's case, we met, 20 years ago when I first started working for Hampton.
At least.
Yeah, it's been at the very get-go when I first started working at Hampton. I remember I asked Mike Phillips, who hired me, I said, "Hey, do you guys trade futures?" And they're like, "Oh yeah, we have an account, but we don't use it very often." And it was Paul Court with FC Stone, and Rob was working for Paul. And then Rob ended up buying that business from Paul. Paul went into retirement, and the rest is history. Now, Rob has been trading futures, lumber futures, for damn near 30 years. I mean, he worked in the pit. He knows where all the bodies are buried.
Yes,
And,
indeed. 25
and I really
years in lumber.
I value Rob's opinion quite a bit, honestly. He sees the world like you were talking about, Ashley, before we got on. He sees parts of the market or the world that I wouldn't otherwise have access to. And so we can share information with each other. And it's been a very good relationship over the last 20 years here at Hampton. So that's how I know Rob.
Yeah, honestly, I feel honored and lucky that, to have guys like you all these years. It keeps me going. It really does. Lumber itself tends to be quiet overall compared to all the other commodity markets out there. Lumber is definitely one of the quietest, and I think it takes the relationships you develop with these guys over all these years that really make it, worth getting up and getting at it every day.
No doubt. So, Robin, you're on Fox every now and then. Tell us a little bit about how you get some exposure, what you do. Tell us how people can get a hold of you. So if we forget to do that at the end, give us a little bit of what your day-to-day is.
Well, day-to-day, I'm just, regular commodities broker. I've been, this August will be 27 years. I kind of worked my way around all the other pits till I found myself in lumber. It was actually a pretty good story. I don't know if it's a real good story for the air, but, it was a pretty good story. I ended it in lumber by default, but you know what? As soon as I got here, I felt like it was my home, from day one. Like, when you know, like I literally, when I first walked into that pit in lumber, you got to picture it back at the exchange. It was like this weird, like, misfit pit that was away from the rest of the general population. It was kind of by itself. And a lot of the runners, when I started as a phone clerk many years ago, I would send orders. They would always, no one wanted to go to that pit, because they knew the guys would give them a hard time. It was just a tough place to be for those. The runners really got punished there. But so I was really nervous when I first got sent to lumber, and I ended up just finding my home there. I loved it. I fit right in with those misfit toys, so it was really cool. But
do you miss those days, Rob?
I do.
Open outcry in the pit.
Oh God, I do. Because that's really the person that I am. Like sitting on a computer and stuff. It's cool. Like I'm glad and I'm proud to still be in the business. But there was nothing like the feel of watching your money grow or blow in the live right before your eyes. And the one thing I could say about open outcry versus the computer. A lot of traders. like, I don't know how experienced the viewers or the listeners maybe are at watching how markets move every day, but like, what goes on in the screen, with bids and offers, just kind of get into the technical side of it a little bit. Guys put offers in, pull offers out, put bids in, pull bids out, where in the pit, you call it out, you're held to that. There's no games, there's no showing a bunch of bids under the market or a bunch of offers to kind of make it appear a certain kind of way. What it is what it was. And I really appreciate that. And no one is, you have to face the person that you are trading against, and I think that there's a lot of honesty in that. It's not so much, you know how it is today with the internet and everything.
Are there any markets that are still kind of open outcry pit traded, or are they
No,
all
there
electronic
was.
now?
Yeah, COVID really put the final nail in that coffin, because everybody was at home and they said, hey, this is a perfect time to close this baby down. But lumber was actually the last, one of the last of the holdouts in that building. And true fun fact, I actually did the very last open outcry trade ever in history of lumber. So that was cool. I made sure I was there the last second on the last day to get my name on the card. So I actually got to go. So that card and my picture is actually in like the CME museum for being the last open outcry of lumber. So it was pretty cool. I was proud of, no matter what, I was going to get that trade in there.
It's crazy,
winner
Rob.
or loser,
just going down and working back to the Board of Trade. I worked there right out of college in the 90s, and then went back to an office at Materials Exchange for a couple of years in the Board of Trade. And it was eerie during COVID how nobody was there anymore, right? A building that you used to see 7,000 colored jackets walking in and out of up and down the street. And it was depressing to see that, right? But
heartbreaking was the word I would use.
Things change quite a bit. So now tell us about what you're currently doing, how you do it, who your customer base is, how anybody that may not be trading right now but wants to can get a hold of you.
Okay, well, I currently work for StoneX, and I've been with StoneX in some capacity for like the last basically about 23 years. First as an IB, and then as I lost, as kind of the market shrunk and we changed contracts, then I became an employee of Stone. So I'm just like a regular house broker. You could find me on StoneX's website, or, I would gladly give you guys my number. Call me anytime. I'm always available. I'm the guy that never leaves, man. I think my record at one point was about 12 years and without a single day off. I just, I had kind of a traumatic life, and I always was able to hide that in, working in this kind of business. It's so, fast paced and, kind of crazy day to day. Like it really, it's hard to focus on anything else but what you're doing there, and so I always appreciated it for that. Some people do different things to kind of, de-stress. For me, is trading a crazy market like lumber that does the trick.
Right on. Well, let's jump in and talk about a little bit about the cash market, and then we'll fold that in because I want to talk quite a bit about CME related to the cash. But just what I saw this week, really, we had a little bit of hope going into last week and early this week, and that seemed to dissipate early in the week and yesterday. I know on the spruce side, it was a call your friends and get a bid market.
Sure.
Matt, did that feel like that yesterday a little bit?
Yeah, I've had a weird week. So Monday I was busy. Yesterday I was really quiet, and then today I'm busy again. So it's like, but I agree that it is one of those kind of markets where you've got to make some outbound efforts to get people to pay attention to what you want to do. So I mean, that's really, it's just trading 101. It's like, look, you got to put some effort in if you want people to. A lot of people are complacent right now, and they're being offered a lot of wood from a wide variety of different angles, So everybody's sort of competing for orders right now, and I don't think there's as much orders around as there was 3 weeks ago. So there's just more competition.
That feels right, man. I mean, I saw OSB was off on print today, which means if OSB is generally off on print by 10 or 15 or $20, it's probably really off by 50 to 70. Southern Pine.
That's like the secret sauce, is it?
Yeah, I was gonna say. I
Southern Pine. Southern Pine was off today and some things. And then talking to a few of my friends, I don't trade pine, so I have a handful of people I can call, like Casey and a few other people. And from what I heard was certain things like 2x4 number 1 and 2x6 again were trading at such discounts to print, it's hard to really keep a finger on it. On the eastern side, things were coming off a little bit in spruce. Euro, we're trying to hit bids on different things and moving inventory. So it's one of those somewhat liquidation, maybe throw in the towel market. With that said, talking to customers, I get a feeling, Matt, their days of inventory is about as low as they normally get, right? And that's been okay and has served them well up to this point. And when I say days of inventory, I think some people that historically kept 90 plus days, and again, that's based on are down to 60 days or below, which I guess listeners may not think that sounds like a lot, but if you really think about it, if you bought a rail car today that ships in a week or two, that wood's not showing up probably until sometime late July. So I think the way I wrote a note down here is customers are looking for a reason to buy.
For sure.
But rail strikes, forest fires, other things aren't going to be the catalyst to do that. And I know
eventually they will, right? And it's like you got to see lumber business is kind of like lemmings jumping over a cliff. They're waiting for the board to go up 15, or they're waiting for an announcement to come from one of the majors, or they're waiting for some piece of information that's going to make them feel like two things are going to happen. One, they might be at risk on covering their shorts profitably, and then B, they might be at risk of missing out on the good deals that are out there, right? So right now, I think there's just a lot of uncertainty, and so I think we're 2 months now of kind of negative market conditions.
Probably
at
since
least
we
9 weeks.
We left it when we left Montreal, right? I mean,
that week before Montreal, things started to cool down a little bit.
The week before, you're absolutely right, because we had that conversation.
About 2 months. So and our shows really are always the catalyst to that, right? You know, whether it be NALA or CLA or whatever they call it, Montreal Wood Convention, it's like, it's always hopped up into that. And then as soon as you get there, kind of, stays steady. As soon as we come home, it usually, if you look at any chart going into any show, it usually rallies going into the show. And I know it's just coincidence, and probably because, like Matt said, the herd mentality, but never fails. As soon as guys come back, then you get the correction.
So it flipped us this year, because Matt and I were talking about that before the show, and it got weaker a week before it, so it confused us. We're like, oh, shoot, what do we do? What do we do now? Because we were all prepared for it to go in all bullish, and it didn't. So I wrote a few notes down here, and it's like, this is what I've been thinking about with futures, and it's driving me batshit crazy. All right, so basically everybody has kind of, since Montreal, the basis has been, it's been a good basis and a good roll. And that you know what that always tells me? Buy cash and sell futures.
For sure.
Right? That's what it always historically tells me. And instead, the industry got longer all the way down from 500 plus mid to high 500s.
I would say 550.
They got longer all the way down in a market that normally is telling you, screaming, there's basis here, you should be hedging. And instead, the industry got longer. So I look at that and I think a lot of people, now look, with that said, I don't know, can't read people's minds. Some of that may be forward selling. I personally don't think there was that much forward selling out there. Some of it, I think, is cowboy Texas hedged, but that's just a guess on my standpoint. But I think all of us have a tendency sometimes to concentrate on market structure. And it seemed to be the overall theme I've been hearing for the last month and a half is you got to be long because funds are short. Yeah. And I'm like, okay. And every time I say that, Riley sticks his head in the office, and you know what he says? Who cares what other people are doing?
Absolutely.
Just trade the basis. Basis works. And I'm like, he goes, quit overthinking it, right?
We talk about this every day, huh, Matt? Like literally every day. All guys got to do, look at the whole year, right? For this August will be 2 years you've been in the same range, roughly call it 470 to 625, right? And the average basis has been about $40, okay? And so we had a couple of times when it got to about 60. Like the most recent last time when we were at 625, we got to every bit about $60 premium in there. And I can never understand that for the life of me, where the interest is after not only rallying that far from the low, but then, like you said, adding to the pile, into not only which is 2-year key resistance, but also the most important fact is the premium to cash. I just, it never ceases to amaze me.
No, maybe so. No, I look historically. I had an old boss who used to say most people like to be long things instead of short things, but you can make money really quickly being hedged or being on the short side of things too. But I see the industry just set up in this weird position like that. And again, I don't know what it is. So I guess the question now is it's going to come down to July SEP roll. And historically, September usually isn't the most fun month to be long in. So my question is, what's going to give here? When are we going to have this all out battle between long industry, short funds? And how when the smoke clears, what's that going to look like?
You asking me, bud?
I'm asking anybody.
I want to hear what Rob says.
Well, okay. First of all, you know what it feels like right now in the middle of June? This feels like an August market. It really does. It feels like the summer doldrums already, which is kind of unbelievable. But I think a lot of that is because of the big break from the high to the low. That kind of shook some guys' confidence in the market, obviously. And I think the reason, to go back to what you were just saying about the difference between the longs and the shorts, shorts, historically speaking, in commodities, a break is 3 times faster than a rally. Okay. Mm-hmm. So that's why, you tend to quick money, especially on the locals side, meaning locals get guys that trade for themselves, pit guys in particular, they would typically prefer to sell the market because they know they're right or wrong by the time they go home at the end of the day, right? Where longs, you got to be very, very patient and see it through and be committed, right? And as far as how is it going to end up battling with the funds, I think just like you've seen the last couple of months. I mean, if you look back at the last 6 or 7 rolls, it was kind of, I hate to say it like this, but it was kind of a whole lot of nothing burger. You would like to think that, you're going to have some movement on the spreads, but I think because there was no extra outside trade in there, meaning like, another reason to buy the market just besides the fact that the funds are short, it's not going to, I do think the spread will end up going over ultimately just because the sheer volume, but the market could sit in its current location. You could see July rally a little bit and SEP break a little bit, and that would satisfy that move. And then, going into no limits, if we're sitting here premium to cash, show me a single month where we have not converged to the underlying cash. And, there was a couple times where it didn't look like we were going to converge, like January, for instance. But what happened? The very last day, the last 2 days goes all the way down. March, same thing. Last couple days goes right down to it. So I think that's still going to be the play. So if you got, if the funds come in, do their damage, and we don't get any kind of like cash news, whether it be strikes or fires or shutdowns or anything like that, I think then you'll be just setting up to converge to underlying cash as we get into no limits, regardless of what happens in between, Yeah,
well, I mean, Rob, we converged last week for about a couple hours, right? And I was all excited about converging, and then all of a sudden it went back out premium. The CME went a premium again, like in the next day. It's like, and I'm a big believer in futures leading usually.
Oh,
and I know,
for sure. The tail wags the dog in lumber 100%.
And I'm having this thing. I'm like going, okay, at what point is futures going to go a discount to cash? And that's usually a signal for us to just get out of our cash, right? But man, it seems to be holding this premium pretty well.
I think that comes back to the market as a whole, though, because if you look, like existing home sales, new home sales, all that stuff, everything, we are definitely underbuilt. So I think guys are, traders are inherently bullish in the back of their mind because, you're looking at existing homes, 3.3 months supply. I know in my 25 years, that's less than half average, right? So, you got this. I think ever since we went to, we did those highs to 1,200, 1,700, you put this, this quiet nervousness in the back of everybody's minds. And, you're sitting at the prices that we're at today. And it's, you say to yourself, okay, I don't know what the mill's profit number is per se, but you got to say to yourself, man, they can't be making a whole heck of a lot of money in here.
Yeah, I would highly doubt. It's funny. I heard Greg talking to somebody in the other office the other day. If he's listening, he'll laugh. I heard him saying, remember at 1,200, you only wanted to sell me one car and go up $50. He goes, now it's 400 and you want to sell me like 20 cars.
Yeah, at least.
But do you think we have seen any? I mean, open interest is at an all-time high for the new contract.
It is.
I mean, are we going to see mill hedging in here at the bottom? I mean, or what are we?
I mean, I can speak to that a little bit. I got to kind of be careful of some things I talk about just because, I obviously represent a lot of those guys.
Understood.
The only time you would see the mills, and this is just from history, the only time you would see the mills sell something cheap, especially a big break like this, would be in the type of situation at the end and they got to move some lumber. Because, the beauty about the exchange is there's a buyer and a seller every single day. Where in the cash market, like Matt was saying, it's busy one day, slow the next, busy the next. Every single day we could sell something to somebody in the futures, right?
And and it also acts as a credit facility.
Absolutely.
Yeah.
So I think, will they do that saying, man, what they should do and what they will do are two different things. But the only time you really see them sell cheap is towards the end where it looks like there's no hope left in the cash market and they just got to move some stuff. Other than that, they're not, from my experience in dealing with these customers for many, many years, they always kind of have this misguided belief. And I've talked about it several times with, you name the mill and I've had conversations with them. And I always get this feeling that, the reason they don't sell ahead of time, and that my recommendation is, hey, sell 1 day's production and hope you're wrong. You know what I mean? 1 day's production. How much is that, right? And especially now in our truck contract, that's quite a bit of volume. Yeah. But I always got this kind of response was, we don't want to stop the progression of the market. You know what I mean? And it was like the same thing at 1,200, same thing at 625. And it just never really made sense to me because actually goes back to good premium, good basis is a good trade.
It's like, I know Matt will laugh at this. I was talking to somebody about it today about the basis and about, I wouldn't keep wood on the ground if we wouldn't have the wood that we have on the ground if we didn't have this basis. Right. And it's almost, I was arguing about why people should do more. Then part of me stopped and why do I want to convince somebody to do something that gives me the edge? Right.
Correct. I was just going to tell you that.
It's like, how much do I want to close that bid-ask spread when it's a $60 premium? I mean, historically annualized, that's a 60 to 100% return on equity in a year. Right. If you can have the metal to sit through some of the drawdowns.
One of the things that I hear from other producers about futures is that they see it as speculation, and maybe they have corporate rules against that or whatever. Maybe they did a thesis on the Enron thing, and they just or Arthur Andersen, and they just have this natural fear of what they call speculation.
Yeah,
but I don't think it's speculating that that every mill in North America would love to sell September at 520 FOB Prince George back in March or April. And I said so on this podcast. I said, hey, SEP's at 630. I mean, that's the greatest sell in the industry right now for a sawmill. I don't look at it as speculation. I look at it as math.
Me neither. And also remember, the mills are always long. Whether they have a position on or not, they're long every day. You know what I mean? So what's wrong with taking profit, if you will, when we're at a $60 premium?
People see that as speculation. They see it as risk-taking behavior, and they don't see it as simple math. Okay, you're selling today's wood at 430, and you can sell tomorrow's wood at 530. I mean, that's basically what Idapac and Matthews and Shelter and Bridgewell, their entire business plan is built on selling stuff in the future at a higher price than today. And they may or may not hedge it. I don't know exactly how they do their deal, but that's their business plan. So I don't feel like I work for a sawmill, but I'm a trader. I don't feel like selling out in the future for an extra 30, 40, 50, $60 basis like Ashley's talking about. You can look at it through two lenses. You can say it's a great basis trade on a 1-for-1 basis, or you can say this is a great mill sale, right?
Yeah,
if I was, XYZ Mill Incorporated, this is a $50, $60 premium to what we're getting for it today. Let's just go ahead and lock in some of our production against that contract. I mean, farmers do it, and ranchers do it. Why can't lumber people do it?
It's funny,
I've
Matt.
been mystified by that.
We'll talk, and I'll look over. Greg will be like, "Hey, the board's at this. What are we selling cash at?" You sell some futures, and like, "Hey, those are the best 20 sales of the day." I'm like,
Yeah.
"Wow,
Right.
that's a good job."
Right.
Right.
Yes.
And
Yeah.
now with that said, you still need to move your cash eventually. So it takes time, money, and patience, and a lot of metal to do that. But generally, I got a little sign that says basis works. And when I freak out and I think we have to pull stuff off and I want to buy everything back or do something, and I look at that and say basis works, it's like you can go home and sleep at night, right? Because like it does.
Yes.
It really, and to Matt's point, I originally came from the grains, and when you talk to the customers there, they literally they don't give you an order based on price. They're like, okay, I want this, Novi beans at a +10. They only speak in terms of basis. They don't even talk about the generic like underlying price of it. That's how serious it is. And that's the one thing that, obviously a lot of lumber guys look at that, but it never fully took off, And I also think maybe I'm nuts, and maybe you guys could comment on this a little bit, but I also think as we get older, I noticed the new generation of kind of lumber guys coming in. They're a lot more risk adverse than say we probably all were growing up. These guys got their, they have their like mill job or their nice wholesale job, and they don't tend to rock the boat like versus when, late 90s through the 2000s, those guys were risk takers. The traders were risk takers. Now I feel like guys want to do, I don't want to say minimal because that's probably not the correct word to use, but they want to do whatever they could just make their, their paycheck and go home and not have to worry about it. You know what I'm saying?
That's part of consolidation in every industry, right? But two things to add. If you're like a lot of these farmers, and we always make a comment about my friends that are farmers, like a lot of times part of their bank covenants are making sure you're hedging certain stuff, right?
Right.
I mean, if you think about that, like we want you to hedge. Okay.
Yeah.
Well,
Now,
I'm curious if some of these same companies that are international hedge currencies or they hedge energy.
yeah, they
I
hedge.
mean,
But do you ever ask a company that you hedge currencies, and they're like, well, that's different. So not really. Right?
Yeah,
I mean,
all the mills, I could say firsthand, pretty much they hedge. Especially Canadian mills, they definitely hedge the Canadian dollar.
but with all that said, like on a positive thing, I'm positive. I'm excited that actually, isn't it crazy? I thought open interest would be at its highest at a high in the market, and the world always throws the funniest results at you for things. And then I look this week, I'm like, every day last week, every day I'd come in and pull up the daily, bulletin to look. I'm like, open interest up 400, up 300. I'm like, how is it going up here? Right.
because the
But
prices are lower, so lower prices attract more speculation,
yeah,
right?
For sure.
That's the job of price.
I'm excited about the open interest going up. I hope we can wake up
Me
one
too.
day and it's at 30, 50,000 open interest, and we got a Southern Yellow Pine contract that has just as much also. So yeah, I mean, I see a lot of positives going, and Rob, what you said, there are a lot of young people in the industry that are afraid of risk, but there's also a lot that are looking for somebody to help show them how to do it, right? And it all comes
Sure.
down to training. And COVID messed a lot of stuff up where people couldn't sit next to like the Matt Beamers and other people and listen to them and watch them do it and watch them execute.
You don't want to listen to
stuff.
me. I don't know what the hell I'm talking about. I'm just along here for the ride.
But there's a lot of good people in the industry and a bunch of companies that I know that do a great job hedging, using it both long and both short, and really are good advocates for the contract. So I'm not bagging on anybody. I just wish everybody would get that person in the company and have that division of the company and not penalize them when they have to actually send a check in for think about it. When it works, you're probably sending a check in to the CME or to your account because the basis is working if you're a hedger.
Well, real quick, I think this comes from you yourself many, many years ago with me, Matt. It was in that same situation, and you once made a comment to me. You said, Rob, the time I sent you the most amount of money is the most amount of money I made in the business. Because obviously you're killing in the cash. You pay for the little bit of hedges that you got, and that's it. And Ash, one thing to your point of open interest, something interesting. Yes, we are at the highest open interest we've seen in the new contract, which I'm very grateful and thankful for. But looking at the old contract, rail contract, our high open interest is about around 15,000. So just to put that in perspective,
very true.
That's 60,000 of our current contracts, right? So we got a lot of work to do, but that tells you got a lot of built up potential.
You absolutely do. And think about it. Some of those people that added to that open interest back then were at 100 different companies that are now at like 4.
Yeah.
Right.
Right.
So
True.
that's, and like Matt, you said last week, or no, when we were talking, you said you have like one person left that when you started was still an independent company.
One company that I've dealt with for 30 years. Yep. Just one.
I thought about that after the show and I'm like, damn, that's so true, right?
That's crazy, though, if you think about that. That's really crazy.
That's consolidation. It's not just on the customer side, it's on the mill side, too. I mean, if you think about when I started in the early 90s, there was over 500 sawmills in Oregon. I think maybe there's 100 now. It's just the way of the world. And if you look at our, like food supply, okay, like who are all the meat producers? They're all working for Tyson or somebody like that, right?
There's like 4 packing plants.
Exactly. So it's just sort of how the world has gone. I have a question for Rob. I'm looking at today's open volume here. Looks like we did about 1,500 trades. So what are your thoughts on that? Are we firmly in the role now, or is this just pre-positioning?
Pre-positioning is exactly what I would call it. We'll have to take a look at open interest in the morning, because obviously there will be, the spread, the widest it went, I think, was only like $17. And if I was just looking at the volume on that today, it wasn't very much. So, for guys to take $7 profit with the spread trading at $10 or, $9 today, that's not a lot considering you're paying for both sides to put the trades on in a spread. Right. So I think, kind of with the way it's been percolating out there's been a lot of rumors swirling around and a lot of, I think there's a little bit of buzz kind of building in the market. That's sort of and legally when you take your broker's test, you can't say a less risky way to be long, but it's a more palatable way to be long is through the spread.
I got that one. Guys, by the way, Rob, when I took that test in 1990, I failed on that one when they asked if a spread trade was less risky.
It's true, though. A lot of people think it is, but you can see some real. I've worked some $75 over spreads in my life, Ash. So
yeah, and I had lived it after that and realized why that answer is false. It's not less risky to trade spreads,
right?
But,
or options.
So the guy, one of the things we had an announcement from an Eastern mill today that's shutting down on Friday.
Was that Arbeck?
I think so. Yeah. So, and I think that's one of their bigger mills. And I would have to think we're going to see a trickle of this into summer shutdowns and longer summer shutdowns, just guessing. And I'm thinking that probably has to happen. Could be wrong on that. And maybe that'll be the real catalyst. People will just get worn out and realize the business is still okay and there's less production out there because the market's pretty efficient as far as.
Ash, you're in your company is fairly significant importer in Florida.
Yeah.
How's the tone over there in Florida? Have they had weather issues like Texas, or are they just like rolling along like no big deal?
So Texas definitely had the weather issues, and usually if I don't hear from the port, I don't really think about the issues, but we haven't had as much. But Matt, too, we don't have, we kind of skipped a vessel, so we don't have anything really on the ground down there to speak of. Our next one's coming in at the end of this month. So we haven't had to actually deal with it. We have had less. I know it's personally as less euro coming over, just the way we're positioned, and I think overall there's a lot less. But we haven't felt anything. Have you felt anything?
No, but I'm more bullish today than I was, a month ago, and it has to do with a lot of different things, right? It has to do with futures selling off down to sub $500. That gets my interest. We have mills that have capitulated; they're just taking offers and moving product. We have other mills that are curtailing, and then we have less euro coming in. And we have this sort of, we talked about it right at the beginning of the show, this feeling of of malaise where people are just kind of sleepwalking through things. And I find that, when that happens, when I'm in my darkest hour, it's the worst time for me to go short or to take cheap offers. It's in hindsight, I've always looked back on those moments and said, hey, if I would have just taken a deep breath and been calm for 72 hours, I'd have been better off. And so I feel like we're there right now. I feel like right now, today, and then another thing that's happening is one of the sharpest buyers that I deal with, who gets talked to by everybody in North America, uh, bought a bunch of lumber from me today. And did we take cheap offers from the guy? Sure, we did. But the fact is, he's buying, and if
Yeah.
he's buying, I think he's sharp. And I trust his judgment. There's certain people in this business that I feel are kind of bellwethers, and he would be one of them.
What I noticed yesterday, Matt, is the same signs that you see. I'm not going to strap the mask on tight enough to know it's today, but I think we're within spitting distance of it.
For sure.
So we get all kinds of RFQs. We put numbers on those RFQs and we look at each other and we're like, hey, these numbers, if we don't get X, we've just made somebody else do something really stupid otherwise, right?
Yeah.
Or somebody's not buying. And I swear we didn't get many of those back. And we're like, wow, what? And then we had some mills calling. We were giving them orders, and we bought some wood because yesterday mills were willing. They wanted to move wood, and they were selling to people that were giving them orders. And it just felt. I agree with you. It felt like we're starting to get in those throes of mills were like, I need to sell at any price. Wholesalers that had wood were selling. And it just felt, you're right, where Matt, we're in our younger days, you would have walked in and thought it was smart to take a whole bunch of shorts.
Right.
and that you should have done 3 weeks ago. Right.
Exactly. Or even last week,
Or-
you could have sold the board last week and picked up $15 this week, with Rob, or you could have just sold some cash at the market last Wednesday and then held on to the orders and bought them out yesterday and probably picked up 15 or $20 too. So, but yeah, waiting until now.
Yeah.
So you don't want to be the last guy at the party. You don't want to be that guy that's like there till 3 a.m, stumbling out the door looking for a date. That's not what you want to be.
I used to have a guy. Yeah, used to have a guy at one company I used to work at. And he goes, I don't want to be the last guy shot in the war. Like,
yeah,
okay,
right.
Like that's kind of a brutal way to put it, but I get it.
But
right?
It's true. Yeah,
It's like-
exactly.
it's like
That's actually a really good analogy.
You're the last guy to take a short order, right? Right when the market's turned. Right? And it's like, but I agree. It's felt like that. And I started this off by saying, if you're a home builder or if you're a buyer anywhere, where's your head right now? You're probably, as you said, in the herd mentality, and you probably are getting news a lot slower than we get it on our front, Matt. And so you're just hearing that things are slowing down right now, right?
Right on.
Because news
Well,
never.
There's definitely a lag. There's definitely a lag.
So the economic data for the U.S. is kind of steady as she goes. We're doing better than Europe or Asia, and yet there are still some headwinds. The American consumer is facing higher prices and higher cost of living. But at the root of what we do for a living, the housing business is, barring some kind of spectacular catastrophe that I can't imagine, it's really stuck. We're stuck between 1.3 and 1.5 million housing starts. There's a unending demand for housing, and I feel like that's going to keep sort of the bottom in, right? Does that make sense? We're not doing the 2008 2009 type stuff. We're really stuck between 1.3 and 1.5 million.
Yeah.
And as long as that's the case, then there's going to be liquidity for lumber products and panel products. And it's just a matter of how much production do we have to deal with at any given time. And right now, production is decreasing.
Yeah, it is decreasing. And I look at like Lance Lambert. I don't know if anybody follows his stuff on X. He does that Reese Club. And he puts out some great charts on there. And one of them he put out to show, where there's a buyer and a seller's market right now based on how much new inventory there is. So guess where there's a bunch of inventory? Texas, all through Louisiana, Mississippi, over to Florida and the Panhandle, up into the Carolinas, because those places you can build a lot of land. Guess where there's not a lot of it's still a seller's market. Up in the Midwest, go all the way up to the Northeast, where there's not as much land, not as much being built. So I think overall we're still going to do something, but the real thing outlier is we got to get multifamily back up a little bit too.
And I was going to talk about that a little bit, from my side of things, because obviously I have, rebuilders and then home builders, and the secondary market, all the rehab stuff, all that has been very busy. Those guys are really busy, and it comes back to our interest rates. Guys are like, all three of us are probably in the same situation. Why would I give up my 2.9% mortgage for 8% when I could just, throw a little bread into the house? And, so I'm definitely seeing that on the secondary market has been a lot busier than my home builders, for sure. And I do believe that's going to change, but I don't think a little 0.5% correction in interest rates is going to do it. You got to get probably down to 5, maybe high 4s to really stimulate it,
Did we get an interest rate change today, Rob?
No, we did not.
No, just the same people have been talking about cuts for the last 2 years, keep talking about it, right? I mean, I'm a believer, Rob, that we got to prove building here at these rates. Yes, it'd be great to get some relief, but my fear is if we start cutting rates, we're probably in a worse situation economically than we want to be.
I agree with that. It's a dangerous thing. Like Jay Powell just said that, the last report, he's almost verbatim. That was exactly it. If all of a sudden we're cutting rates, not enough progress has been made.
Yeah.
There's a French word for that. It's called chité.
Oh man,
that's good.
Well, cool guys. We were up. We put in over 40 minutes today. So, Robin, if somebody wants to get a hold of you, I guess they can go to where's the website at? They can go for that.
I'll give you a couple information. So anytime anyone want to email me, my email address is robin.cross, robin.cross@stonex.com. I'm always available there, or you could call me direct anytime. And I'll give you my number here.
You might want to leave your number over here in case some bots scrape it and you start getting all kind of texts.
Hey, that's okay. I'll take it though, because at least it'll keep me company for these long sideways days. So that's fine. And my number is 312-780-7062. And like I said, I'm more than happy to talk to anybody anytime. I really enjoy it. I do this because I love it. Obviously not because it's extremely lucrative in lumber these days, but I definitely love it. And, I hope to finish my days out as a lumberman.
That's awesome. Rob, it was great having you on. It, really, really cool, Matt. I'm glad you hooked us up, and we'll have you on again, Rob, here. And
I feel like I got a lot more to talk about. I looked at it 40 minutes. I feel like we're just getting going, boys.
Well, put a good plug in for the Lumber Word on Fox next time you're on it.
Yeah. It would be my pleasure.
All right, boys. Listen, thank you so much. And everybody, thanks for listening. And we'll look forward to doing this again next week.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.